Yeah.
Yes, sir.
So the first chapter is Introduction to Accounting. So we are not someone who haven't discussed a little bit about this, correct? So
Yes,
under
sir.
this chapter, we are going to see about the financial statements. Financial statements is divided into two parts, that is statement of profit or loss and statement of financial position. And as well as we are also going to discuss about types of business entities, like what kind of business entities exist, sole
Yes.
proprietorship or sole trading. Okay.
Yes, sir. Sir, I can't see the screen.
Yeah. Already shared the screen. Once again, I'm sharing. Please confirm. Can you see the screen?
Yes, sir, I can see it now.
Yeah. Second is partnership form of business, and then company form of organization.
Okay, sir.
Company form of organization. Okay. So these are
Yes,
the
sir.
three types of businesses which exist, and then we are also going to see these statements are prepared, am I right? But for whom
Yes,
they are prepared? They are prepared for the users of financial statements. So who
yes.
are the users of financial statements? Who are the users of financial statements? The users of
Management
finance,
account.
yeah, no, no, the users of financial statements can be divided into two,
Okay.
internal users and external users.
Okay.
So internal users can be the board of directors of the company, the employee, the management of the company, and the employees. Okay.
Okay, sir.
So we also call them as stakeholders. What we call them?
Stakeholders.
Stakeholders.
Yes, sir.
So what do you mean by stakeholder? Stakeholders are nothing but the connected parties.
Connected
What are they?
parties. Yes, sir.
Connected parties, connected parties to the company. That means these are the ones who are connected to the company. Okay.
Yes, sir.
So since they are connected to the company, they are company's stakeholders. Okay. So stakeholders are the internal ones and the external ones. So here when I
Yes.
speak about external, I speak about the investors, shareholders, bondholders. These are investors, but bondholders are also creditors for the company.
Yes, sir.
Who are creditors? The ones who have given loan to the
The
company.
loan.
I
Yes,
can
sir.
say bank and public. Public in the sense in form of bonds. Excuse me, just a second, Fatima, just a
Yes.
second. Yeah.
Yes, sir.
Yeah. So then like we were discussing about the creditors. Who are creditors, and like what is a bond? What is the difference between a share and a bond?
A share and a bond.
Yeah. See, share is nothing but if, see, you are working in a company and you have some surplus amount with you every month in form of
Yes,
savings.
sir.
So you look up for investments, correct?
Yes, sir.
So you ask someone who is knowledgeable and who is someone who is a analyst or some advisor, okay, that where shall I
Yes.
invest, and he will immediately tell you that the traditional investments which are available is share and a bond. So you'll
Okay.
ask a question, what is a share and what is a bond? Can you differentiate? So share is nothing but companies companies want money in form of capital. So you can provide this capital to company in two ways. One is in the form of share capital, one is in the form of loan, correct?
Yes, sir.
So the only difference between these two is, if you want to provide the money to company in form of share capital, that means if you want to provide company the capital which it requires in form of shares or in form of share capital, here you are taking the risk in the company. That means it's a risky investment. Why you are taking the
Yes.
risk? Because you are taking ownership in this company. What are you taking?
Ownership.
That means that's called shareholding.
Yes, sir.
So shareholding is nothing but taking some ownership in a company. Let's say company requires 10 lakhs capital and you have invested, you have given 2 lakhs to company. So company will give you a
Okay.
shareholding of 20% in that company itself. What will company do?
20% of shareholding.
Yeah, they'll give you 20% of shareholding or ownership. So here, when you buy shares of a company, you become the owner of that company to the extent of the holdings what you have, or to the extent of investment what you have done. So this particular shareholding or shares, if you own, you are buying the shares. Am I right? When you
Yes,
are
sir.
buying the shares, that means you are owning that shares. So when you own shares, it represents that you are taking ownership in that company. That means you are an owner to the extent of your holding. So suppose let's say 10 lakhs is what they required and you give 2 lakhs to them. So you are 20% stakes you have in that company, or 20% shareholding you have in that company. That means you are 20% owner of that company. Do you agree with this point?
Yes, sir.
Okay. Now the next question comes, what is a bond? Bond is nothing but you are lending money to company.
Okay.
Lending money, or it's like a loan you are giving to company. Okay.
Okay. Okay, sir.
Now you will be asking a question, how will I give loan? Will I give cash to company? See what happens. Suppose this is you and you are approaching a bank for loan. So when you approach bank for loan, what will bank ask you? Bank will ask you security.
Yes, sir.
They'll ask you give some gold if you have some property, if you own some property, you should bring those properties title deeds. That means the documents, land documents
Documents.
of that
Yes.
company, of that land, and that documents of that land or property, and you should keep with us that document, mortgage that with us, or
Yes, sir.
give that as collateral to us. Collateral in the
Okay.
sense, like you should keep those documents with the bank, because you are taking loan from bank as a security. You are giving that particular property documents to bank, because bank does not trust any individual like that. If in
Yes, sir.
future if you don't repay the money, then bank will lose its money, correct? So as a security, they have asked you the property documents. If you don't pay,
Yes.
they can sell that land and they can recover their money. Is it right?
Yes, sir.
So in the same way, that was from the perspective of you and bank. Now let's say this was in the case of you taking loan from
Okay.
bank. Now let's say if I reverse the example and keep bank here and you here. This is you, this is bank.
Yes, sir.
I'm reversing the case. Now this is bank and that's you.
Okay.
Now bank wants to borrow from you. Then what? It's not a strange question. Of course, to run its business on daily basis, bank requires lot of money. and bank can
Yes.
borrow in this way. So what bank is doing is, bank has a 10 lakh rupees worth of assets. So what bank has done is, bank has divided the assets what they have in small fragments. Let's say they divided those assets in 100 in form of 100 rupees securities. What is that?
100 rupees securities.
See there, this is a title. This is a title deed which shows 10 lakh rupees worth of land bank has. Now bank
Okay.
is not borrowing only from you, Fatima. Like
Yes, sir.
you, bank is approaching many people in the market. Okay, but what bank is doing is, they are very clever. They are dividing this 10 lakh rupees worth of property into 100 rupees
Yes, sir.
certificates. What they are doing? Certificates. Because they, why they are doing this, that is also a very relevant question, because they know that if I change this equation and if I keep that bank has 100 crore rupees worth of land, do you think can a bank get a single person to take 100 crore rupees worth of land
No.
from bank?
No.
There is no single person who can directly, like, uh, it's very tough for when one single person giving 100 crores to bank, okay, and accepting
Yes, sir.
that title documents and like lending money to bank of 100 crores. It's very tough. That means only one person cannot fulfill that commitment to bank. They cannot give 100 crores to bank and take bank's documents. Bank
Yes, sir.
knows that. So for that reason, bank, what bank is doing is, they are dividing that property's valuation they did. The valuation of
Yes,
the
sir.
property happens to be 10 lakhs. They, what they did is, they made bond papers, and on each bond paper they wrote that, they printed or wrote whatever, that they are liable to pay 100 rupees for this bond paper, whatever they are issuing to public. Okay, are you
Yes,
understanding what
sir.
I'm saying?
Yes, sir.
So in that bond paper is like a promissory note in which bank is writing clearly that bank's asset is backup for this paper. See, we use currency notes now.
Yes, sir.
So that currency note is like a paper. Okay. When you go to some other country, you go to Dubai and give that 100 rupees or 500 rupees to those Dubai people, they won't, they say that this is something like we can play with this, but we cannot use this in our country. Okay,
Yeah.
they'll throw it away
Yes.
because it's of no use for them. But in India, it's
Yes.
useful to us. Why? Because it's a legal tender in India. But why it is so valuable? Why it is having that value of 500 rupees or 1000 rupees or 100 rupees? It's not like they're printed in different colors. No,
Yes.
it has the gold backup. The India has a lot of gold reserves, correct?
Yes, sir.
So how much gold reserves the Indian government has, those much notes or currency they will print and they will circulate, because
Okay.
they can pay that much capacity they have, isn't it so?
Yes, sir.
See, if I ask you a loan, sorry, if you ask me a loan, I'll ask you your security. Why
Yes,
will
sir.
I ask your security? Because that will give
Just in
me,
case I don't pay.
yeah, that will show me the paying capacity what you have. That means
Yes, sir.
if you don't pay, I can recover my money of that much extent at least. So
Yes,
how
sir.
much capacity we have, that much only we can, that, like that assurance or that guarantee we can give to people that we can pay the money. Am I right?
Yes. Yes, sir.
In the same way, bank has assets, and bank is giving you that surety that this assets what I have, I'm dividing that assets into 100 rupees bond, and I'm giving those bonds to you, and I'm taking 100 rupees for each bond. That
Yes,
means
sir.
I will repay this money to you in 5 years or 10 years, whatever time. Till that time, you keep the security, and I will pay you interest for that. What bank will do?
Interest will be
So
paid.
whenever we borrow money, we pay interest not to bank. Now
Yes,
bank is
we do.
taking money from us or borrowing money from us, and they are supposed to pay us interest for 5 years or 10 years. Okay,
Yes, sir.
they will decide. See that bond, whatever I have mentioned here, this bond will have some particular details that company is borrowing, bank is borrowing. This bond will have so and so details that bank is borrowing like 100 rupees from us, okay, and they will pay the money in 10 years. Till the time they don't pay the money, they'll pay 10% interest per annum. Did you understand?
Yes. Yes, yes, sir.
Now, if you hold that bond, you are not the owner of the bank, but you are a lender to the bank. In same case,
Yes.
let's say instead of bank, I say Tata, TCS. TCS wants money of 10 lakhs. So they will also issue bonds to public. Okay. That means
Yes.
TCS is borrowing money from public, and public is having a security of 100 rupees with them. Now that will also have one condition that TCS will repay them the money in 5 years. Until that time they'll pay interest of 5%, whatever. See,
Okay.
that is anything can be assumed in that way. Okay.
Yes, yes,
So did you
yes, sir.
understand the difference between bond and a share?
Yes, sir. I
Yeah,
understood.
share is something which conveys the ownership. Bond is something which conveys that the company has borrowed money from the public. So
Yes,
bond
sir.
shows liability. What does bond show?
Liability.
Bond is a liability. Bond is a liability to the company. Lead. Bond is a liability to the company, and shares are nothing but that is the equity. What is that? Equity.
Equity.
Equity or ownership. It shows the ownership. So yeah, I'll give you a very good example regarding equity.
Yes, sir.
I'll give a very good example regarding equity. Suppose you bought a car for, this is a car you bought,
Yes, sir.
and this car you bought for, let's say 10 lakhs, and you made a down payment of 2 lakhs. Okay.
Okay, sir.
And 8 lakhs you borrowed. So this 8 lakhs, can I say it is debt?
Yes,
You
sir.
you borrowed, na? You
Yes, sir.
borrowed from bank, you
It is.
financed this car. And can I
Yes,
say
sir.
this 2 lakh rupees is your equity?
Yes, sir.
Because you own this car to what extent? 2 lakhs or 10
2
lakhs or 8
lakhs.
lakhs?
2 lakhs.
Yeah. So what happened is you bought this you bought this car to your house, and you invited all your friends for a party, and your friends are have come and everyone has arrived, and meanwhile one friend asks you, you own this car, correct? You say yes,
Yes.
I own this car. What is the value of this car, like, or how much, to what extent you own this car? You say 10 lakhs. What are you speaking? Like, why are you acting so stupid? This is 10 lakhs car, I bought this, it's with me, I have the keys, I am the owner, everything. No one is going to interrupt me from using this. But your friend says,
Yes.
why? If you don't pay, you have bought this for EMI, if you don't pay the EMI, then bank will take away the car from you, correct?
Yes, sir.
So what does he mean? He asks you one very brilliant question. He or she asks you, you own this car to what extent? Now the answer is you own this car to extent of 2 lakhs.
2
So
lakhs.
that is your equity. Okay. Equity shows ownership. Okay.
Yes, sir.
And rest is debt. So that is what it is. So here, when I make a balance sheet of a company, it has equity, which shows the ownership. That means shareholders have given how much money to company, and then
Yes, sir.
there is debt that shows the liability. That means what company has to pay to people, or what is payable to the company. Okay. This
Yes, sir.
is what company owes. OWE. Understood?
Yes, sir.
So this is what we have understood, the difference between a bond and a share, and you should be in a position to answer that question any point of time. Fine. Shall we
Yes.
move forward now?
Yes, sir.
Yeah. So we did not complete that point here. We were going into that, and the creditors, and then comes the what we say, customers. Customers are also one of the stakeholders of
Stakeholder.
company. Yeah, why?
Yes, sir.
Because they are also connected parties to company. They buy the goods of company, and the company survives. And then
Yes, sir.
NGOs, pressure groups, and in fact, I can say government. Many of the governments also do this. They are
Yes, sir.
also connected to companies because they want taxes from companies on the profits what companies make. Okay.
Yes, sir.
So we had a very good discussion regarding this. Now let's move forward. So now nature, principles and scope of financial reporting. See, financial reporting. So we have already discussed about this. Financial reporting is a way of recording. You do recordings in journals. You do analysis by way of preparation of like ledgers. So recording is done in journals. Posting and analysis is done by way of preparation of ledgers and trial balance. And summarizing is nothing but by way of preparation of statements. Correct?
Yes, sir.
Statements in the sense, what do you make under statement? Statement of profit or loss, statement of financial position, correct?
Yes, sir.
You will be also learning something else, statement of changes in equity and statement of cash flows in the
Okay.
coming future. But cash flows, and this already I have shared with you, and this also was a part of that, and you
Yes,
have
sir.
gone through them. Now after, we'll be doing those chapters afterwards, correct? So
Yes.
journals is also called as book of prime entry, because first and foremost, whatever transactions happen in a company are first recorded in the books called journals, correct?
Okay. Yes, sir.
Now, what about financial accounting and management accounting? We have already discussed that financial accounting is something which deals with actuality. That means it deals only with the monetary transactions which happen in the business. Whatever happens whatever is like you're buying or you're selling, whatever is happening in actuality, in terms of money, or like all the financial transactions or the transactions of financial nature, they can only find place in financial accounting, correct?
Yes, sir.
So this only deals with monetary aspects. This deals with monetary as well as non-monetary information or transactions here.
Okay, sir.
Monetary as well as non-monetary. So financial accounting is done by the financial accountants of a company. And see what happens is there's an accounts department in a company. In that there is a accountant who is a certified accountant, like someone does ACCA or someone does chartered accountancy course. They will be the head of this department, correct? Under
Right.
them they
Yes.
have a team of senior accountant and junior accountant. So they'll divide the task among those accountants. Junior accountants will do clerical job of like making ledgers, making journals, ledgers, okay? Then
Yes, sir.
the work is divided amongst different employees, and they will divide the task. Someone will be doing ledger, someone will be doing the like a journal, someone will be doing the subsidiary books, someone will be maintaining the bank reconciliation statement, or various things they'll be doing, okay? But the
Yes, sir.
reports are prepared under the supervision of the chartered or the certified accountant. Did you
Certified.
understand?
Yes, sir.
Yeah. So the accountants play a very key role in a company. They deal with the finance of the company, and they are the ones who prepare the financial reports at the end of the year. And with the help of those financial reports, the stakeholders of the company will come to understand what is the actual position of the company at the end of the year, and whether the company is profitable or not. Isn't it so?
Yes, sir. Yes, sir.
If the company is profitable, then what? Then they can think of continuing with the company, or the potential investors can invest. Am I right?
Invest. Right.
All
Yes,
this
sir.
is only possible if the people know the financial reports at the end of the year. So these guys prepare the reports at the end of the year. Okay.
Yes, sir.
So that is the most important or key thing for the company. Management accountant will their task starts where the task of these guys end. So what they do, they take the financial reports which are prepared by the financial accountants as a base, and will do their analysis. They will
Yes.
study, they will do comparative analysis, they will compare the current year statements with the previous year statements, and they will forecast the future of the company. So they will do a lot of analysis. Amongst them, ratio analysis is one of them. Already we have discussed,
Yes, sir.
I've given the videos of ratio analysis to you, correct?
Yes, sir.
And apart from that, the management accountants also do some costing related work, which we have already discussed in our first session, you remember.
Yes, sir.
And they also prepare the budgets for the company. Budget is financial plan. They do future predictions. They do future forecasting of the company. What is going to be the future of this company in the coming years? How that company is going to where the company is going to head towards, whether it's going to be a profitable concern or not. They will do all this by doing a thorough analysis of the financial reports, correct? They
Okay.
are
Yes.
also involved in planning and controlling
Yes, sir.
like task. Yeah. Next, cost accountants also, we have understood what cost accountants do. They deal with the costing part of the company. They will ascertain the cost of a product. They will help the company in deciding regarding make or buy. That means whether the company has to manufacture or whether the company has to buy from some other source. Isn't it so?
Yes, sir. Yes, sir.
And we have already discussed how they do that, correct? So
Yes,
till
sir.
here everything is all right, correct, Fatima?
Yes, sir.
Now comes the financial statement. So what is the financial statement here? Let's first understand about statement of profit or loss. So statement of profit or loss is nothing but a statement prepared to know the profit or loss of a company. Okay.
Yes, sir.
What will you record in statement of profit or loss? You'll record revenues and expenses. Correct?
Yes, sir.
What is this revenue all about? Revenue is the income generated by the operations of a business for a period. That means you will see, you will be doing a business activity. In that, every day you will be selling goods to people. So when you sell goods to people, what will you get? Revenue. Am I right?
Yes, sir.
Your business operation is what? Selling goods to people. And when you sell goods to people, you'll collect money from them, and that is nothing but your revenue. What is expense? See, if you want to run a business activity without spending money, can you run business activity?
No.
So to run your business activity smoothly, you have to spend money for that. So the money what you are spending to run your business activity on daily basis or routine basis is nothing but your expenses. Okay.
Yes, sir.
Next point. Income. So now here they are telling you, they are showing you the definition of an income and also definition of an expense. Please understand this very carefully. I will explain you what this is. So income is increase in assets and decrease in liabilities.
Okay.
How it is? See, suppose you have a land, and
Yes,
the
sir.
land you bought for $100,000. The land
Okay.
value has gone up to $120,000. Okay. So
Yes,
there
sir.
is an appreciation in the value. That appreciation you have to record. You have to
Okay.
record. Okay. You have to
Yes, sir.
record it or not. This land you are holding since long time. You are
Yes,
holding
sir.
this land since long time, and this land is a investment property for you. That means it's a ancestral land which you are holding since 10 or 20 years or 30 years, and if you get a customer, immediately you are ready to sell this. That is what your intention is. So
Yes,
since
sir.
it is an investment property, you will be learning about this in F7 subject. International Accounting Standard 40 deals with investment property.
Okay, sir.
So what rule says is, whenever you hold some asset, you're holding it since long time, and the value of that asset increases, it is an income for you. Am I right?
Yes, sir. Yes, sir.
So increase in assets. So this, now the land is of this much value. You will be showing the land at 120,000 in your balance sheet.
Yes, sir.
And in your statement of profit or loss, you will be showing the increment in the value. So the land has increased by how much? $20,000.
Yes.
So you'll be writing increase in land
Land.
value as 20,000 as income. Did you
Yes, sir.
understand what I'm saying?
Yes, sir.
Now decrease in liabilities. How decrease in liabilities is a income? Suppose I'll give you a very good example, a very excellent example for this to understand in a simple way. So this is you, Fatima, and you have this building, and you have this, you reside in this floor, and this floor is, you want to let out for rental purpose. Okay.
Yes, sir.
So you have some tenants who have approached you, and the deal is finalized almost, and the final thing with this deal is nothing but they have to give you the entire year's rental as advance. Okay. So you have
Yes, sir.
finally agreed that your tenant should pay you $10,000, 10,000 rupees per month, and it happens to be 120,000 rupees for the entire year. Correct?
Yes, sir.
This 120,000 you are asking them to pay in advance. So they gave you this money in advance. This money what you got as 120,000 rupees advance rent,
Hmm.
is it an income for you, liability for you, or what? Or expense for you?
It's a liability.
Of course it's a liability, but why and how?
Uh,
It's very simple, na? Did you, this is on Jan 1st they made the payment to you. Did you give them the service what you are supposed to give them, as like the
Not
landlord,
yet.
yeah, you have to give them the rental service, correct?
Right. Yes, sir.
Your obligation is to give them the rental service for 12 months.
Hmm.
The money has been collected, but the service
Yes.
hasn't been given. So you have an obligation,
Yes,
correct?
sir.
So since the
Yes.
obligation is there, it's a liability. Now what happens? This liability of $120,000 will slowly steadily reduce and convert into income. How?
Yes, sir.
First month, Jan 1st, you collected the money, and it is Jan 31st. First month has passed away. So now
Yes, sir.
your liability is of 120,000 or 110,000?
110.
Why? Because 10,000 you will show us revenue. You will show us revenue or
Revenue.
income in your profit or loss account or
Yes.
statement of profit or loss, because you have given them the service and that has become an income for you. Now,
Yes,
as
sir.
the December 31st approaches, the entire 120,000 becomes zero liability and the entire 120,000 income you have earned. So reduction in liability or decrease in liability is an income or not? Please tell me.
It is.
It is proved with the example.
Ye-
Shall we move forward?
Yes, sir.
So income is increase in assets or decrease in liabilities that result in increase in equity. Of course, whenever you earn the gross profit, whenever you earn the net profit of the company, that goes to an account called retained earnings account. Which account?
Retained earnings.
This retained earnings is a part of equity. Am I right?
Yes, sir.
If you have seen the video, financial statements video, you saw that equity has share capital, share premium, retained earnings, correct? Revaluation surplus. You saw that or not?
Yes, sir.
So since this net
I've
profit
seen
go,
it, sir.
yeah, since that net profit goes to retained earnings account, and retained earnings account suppose has a balance of $100,000 and net profit of the year is 20,000 extra, that 20,000 will add up to the $100,000 and it become 120. So that is increasing your
120.
equity or not? It is increasing your
It
equity,
is. It is.
correct? Yeah.
Yes, sir.
So your equity should increase on what basis? Because of the addage of income to it. That means
Yes, sir.
transfer of net profit to retained earnings, but not from the owner's contribution in form of share capital. That is an important
Yes.
point. Next point.
Okay, sir.
Yeah, let's go to the expenses part. Expenses are decreased vice versa. See, if your asset suppose was of 100,000, okay, and
Yes,
its
sir.
value is decreasing, like depreciation, it is getting depreciated, it has become 80,000.
Depreciate.
So you will
Yes,
show
sir.
that depreciation as an expense in the income statement. Understood?
Yes,
And
sir.
increase in liabilities, that means your obligation is increasing.
Yes, sir.
So what happened is you took a loan of 100,000 and now you took 50,000 extra loan. Previously you are paying interest of 10 you are paying interest of 10%. Previously you are paying 10,000 as interest, 10%. Now you are paying extra 5,000. So now interest is 15,000.
Yes, sir.
Previously the loan was of 100,000. You used to pay
100,000.
10% interest, that is 10,000. Now extra,
Yes, sir.
you have taken an extra loan. The liability has increased.
Yes, sir.
The liability is increasing and it is decreasing your revenues by increasing the expense. Correct or not? Why? Because you are
Yes, sir.
paying additional interest. That's what.
Yes, sir.
So this is also done, and it reduces your retained earnings and decreases
Yes.
your equity. Expenses decreases your equity. Now,
Yes, sir.
since we discussed that there are three forms of business: sole trading, partnership, and company form of organization, there are certain differences you will see when you'll prepare the accounts of either sole trader or company form of organization. Partnership is not there for you; they deleted it long back. Okay.
Okay.
So we will start with sales, very simple, and this is the vertical format of statement of profit or loss. We will deduct
Okay.
cost of sales, and cost of sales is all about, the formula is opening inventory, okay, opening inventory plus purchases, and if any expenditure related to purchases or any direct expenses will add. What do you mean by carriage inwards?
I don't know.
See, carriage inwards is nothing but when you buy goods from your supplier, those goods you pay some charges for loading and unloading at the
Yes.
inception. So that is nothing but that is carriage inwards. Okay, so that
Okay. Okay.
you will be paying them when you'll be buying the goods, and this you'll be doing only once. So that is a
Yes.
direct nature, direct expenditure. It's kind of a direct expenditure. What is that? It's kind of a
Direct.
direct expenditure. So we add that and then less closing inventories. So this entire thing when you adjust, that means cost of sales is all about opening inventory plus purchases plus any kind of direct expense like carriage here minus closing inventory will give you COGS, cost of sales or cost of goods or whatever. When you deduct this cost of sales, this part from this revenue, you will get gross profit. Okay, So I think I have given a very good example related to this in the video. Shall I repeat that once again to understand this in a
Yes, sir.
better way?
Yes, sir.
Very simple. Suppose you bought 100 boxes, and you sold 80 boxes out of that. It is not necessary that you will always sell 100 boxes, correct? There can be unsold
Yes, sir.
stock also, correct? Just give me a
Of
second,
course, yeah.
Fatima. I'll drink some water. Just give me a second.
All right. All
Yeah.
right.
Yeah. So, hello.
Yes, sir.
So you will be coming across carriage inwards and carriage outwards. Okay, these two words also you will be coming across. So I'll
Yes, sir.
tell you the difference. Inwards is nothing but when you like buy goods from supplier, you have to pay the carriage expenses to like bring the goods from suppliers go down to your factory. Am I right?
Yes, sir.
You will spend only once this amount. So that is a nothing but example of direct expense. So I have already explained you what is direct expense, indirect expense in the previous session, correct?
Yes, sir.
Carriage outward is nothing but once the goods have come to you, the raw material, this is nothing but raw material, and those raw materials you have converted into finished goods, and now the finished goods are ready to be sent to the market, delivered to the market. That time you will be paying for van expenses, delivery expenses, okay? And this will be doing on routine basis. This will be doing only once. That means you will be getting the raw material once, but this
Yes,
will
sir.
be doing on routine basis, recurring nature. So can I say this
Yes,
is
sir.
indirect expense?
Yes.
I can say that is indirect expense, now.
Yes, sir.
Yeah. So that's what it is. Yeah. So now 100 boxes you have bought. It is not necessary that always you will be selling 100 boxes. Suppose you are selling 80 boxes. How many boxes?
80.
80 boxes. So you bought 100 boxes for at the rate of 100, and you fixed that you will be selling 80 boxes at the rate of 120. How much?
120.
So 80 boxes into 120 will give you 9600 revenue. Okay, less
Yes.
cost of sales. So under cost of sales, what you will be doing, you don't have any opening inventory. Let's say opening inventory is nil. How much did
Okay,
you
sir.
purchase? How much did you purchase?
100 boxes. For
100
100.
boxes. Yeah.
Yeah.
So you'll take 100 boxes into 100. That is how much? 10,000. Correct? It
Yes, sir.
costed you how much? 10,000. Less closing inventory. So how many boxes you sold? 80.
80.
So you want the cost of 80 boxes or all 100 boxes to compare?
80 boxes.
80 boxes. So we'll deduct 20 boxes. 20 into 100. That is 2,000. So now the cost is how much? 8,000. What is your
Yes,
profit?
sir.
1,600. Can I say that is your gross profit?
Mm, yes, sir.
Yes. Did you understand this one, Fatima?
Yes, sir. I understood it.
So 80 boxes you took the revenue and 100 boxes cost you have incurred, but you sold only 80. So since you sold 80, you will consider cost of 80 boxes only. So since the formula of cost of sales is like we don't want to mug up the formula, it's practically very easy to understand, and
Yes, sir.
it has a practical explanation also. It's very practical formula. How opening inventory, let's say it is nothing, zero in our case. Purchases, we purchase 100 boxes, and from that like the leftover is 20 boxes, correct?
Yes,
That
sir.
means we are considering in total how many boxes cost? 80 boxes. So 80
Yes, sir.
boxes revenue, 80 boxes cost. Revenue is 9600, cost is 8000, so gross profit is 1600. Finished.
Yes, sir.
Any doubts in this?
No, no, sir.
So you will be having this gross profit, and from gross profit, if you have a gross profit and you have any other income, like other incomes, you may be having incomes in a business. Suppose your company is earning some profit or they are saving some money. They will, what they will do? They will invest, no? They will invest,
Yes,
correct?
sir.
And when they will do investments, that is a part of other income, correct?
Yes, sir.
So that other income will be added to gross profit because you add income to income. You add, what do you do? You add
Income to income.
income, and you got some discount also from your suppliers. You got some
Yes,
discount
sir.
also, and that discount received is also an income. So all the incomes we added, and then we removed all the expenses in our business like rent, carriage outwards, telephone expenses, electricity charges, wages and salary, depreciation. All these are expenses, correct? Depreciation is nothing but the
Yes, sir.
fall in the value of asset, decrease in the value of asset, and bad debts. That means customers have taken goods from us on credit basis. They are not paying us. Motor expenses, insurance, all this we deduct, and then we get net profit, profit for the year. Okay, just have a
Yes,
look
sir.
at this. If you have got any doubts, you can ask me. Just scroll up once again.
Yes, sir.
For any particular thing, you can ask me. तो अपने पास अगर इंडिया के अंदर ही ट्रेड करेंगे तो लोगों के प्रेफरेंसेस ऑलमोस्ट सबके सेम रहेंगे, लेकिन दूसरे कंट्री के लोगों के प्रेफरेंसेस हमारे प्रेफरेंसेस से अलग रहेंगे, ठीक है? उसके बाद अगर आप स्पेशलाइजेशन लेवल को स्पेशलाइजेशन लेवल ऑफ प्रॉफिट एंड ह्यूमन रिसोर्स टेक्नोलॉजी ऑफ अ पर्टिकुलर कंट्री और ओनली एट नेशनल लेवल रिलेटेड टू दैट पर्टिकुलर कंट्री. And as foreign trade is concerned, to cater to the needs of customers around 25 countries, the specialized covers required for opposite factors is at international level, that is on vast scale. ठीक है, तो specialization level बहुत high होना चाहिए अगर आपको international transaction करना है. Trade policies, domestic trade क्या है? अपन सिर्फ इंडिया नेशनल पॉलिसीज देखनी है. जब foreign trade कर रहे हैं तो international policies देखना पड़ता है. Restrictions, domestic trade में कोई restriction नहीं है. अपन कहीं भी कुछ बेच सकते हैं. इसके लिए आपको कुछ custom duty पे करना पड़ता है, कुछ extra दूसरे duties टैक्स एडिट करना. लेकिन foreign trade करें तो restrictions रहता है, quota रहते हैं, इससे ज्यादा अपन नहीं मंगा सकते, इससे ज्यादा अपन बाहर नहीं बेच सकते. यहाँ ट्रेड का restriction रहता है. Cost of transportation of warehousing. Domestic trade में क्या है? The cost of transport to product across the country and storing them are less when compared to those of foreign trade. ठीक है? And वही foreign trade का आपको transportation बहुत ज़्यादा है. ठीक है? Risk का अनुसार कहते हैं कि domestic trade में risk कम होता है as compared to foreign trade. Foreign trade में अपन को सामने वाली पार्टी को सही से जानते नहीं. ठीक है?
Documentation process, domestic trade में काम का communication होता है, foreign trade में and balance of payment problem है, foreign trade countries have to pay for imports from other countries not easily accepted currency.
So once done, tell me. I'll scroll it down. Fatima.
Yes, sir. I'm done with the this one, sir. Can you scroll a little bit down? A little more.
Yeah. A little more.
Yes, sir. Okay, done. Yes, sir.
So done till here.
No, no.
Acha,
Just 1 second, sir.
okay.
Specialization मतलब देखो आपको पूरे अगर फॉरेन में करना है तो नेशनल पॉलिसीज इंटरनेशनल पॉलिसीज सब मालूम होने चाहिए कि आप मिस्टेक नहीं कर सकते आप ये मिस्टेक आपको जेल में भी डाल सकते हैं ठीक है सेकंड आंसर भी टीचर्स हो गया ना टीचर्स में कौन सा कॉम्पिटिशन पूरा दिखाई ना राज्य में बायोलॉजी कलर्स ठीक है होमोजेनियस बेटा संदर्भ मेरा क्लियर है एब्सेंस ऑफ आर्टिफिशियल रिस्ट्रिक्शन कोई रिस्ट्रिक्शन नहीं है बाहर जितना चाहे उतना सेल कर सकता है सॉरी सेल जितना चाहे उतना सेल कर सकता है बाहर जितना चाहे उतना नहीं सकता The NPR is corporate mobility of factors of production and growth like factor production factors क्या land labor capital and organization. Corporate mobility है कहीं भी कोई भी चीज यूज कर सकता है. No transport cost मतलब मार्केट वही है जहाँ प्रोडक्शन हो रहा है. तो इसलिए ट्रांसपोर्ट कॉस्ट नहीं है. Buyer sellers both have corporate.
So done.
एक बार कैपिटल सब मोबाइल है ना. वैसे भी एक
Yeah.
से जो आराम से क्या ठीक से देखो रमन मैं लिखे भी क्लोजिंग स्टॉक कभी भी उसके नीचे रहेगा पूरा लिखिएगा
So what does this statement tell? We will discuss. So key features of statement of profit or loss. This is very clearly understood. This statement tells you about the profit or loss of the business. Am I right?
Yes, sir. Yes, sir.
Yeah, that's understood fine. Then comes the statement of financial position. Statement of financial position is nothing but list of all assets and liabilities, and that shows the actual position of your business. Correct?
Yes, sir.
So shall we cover up this in the next part? These assets and
Sure, sir.
liabilities. Yeah. So we will start. We have done till income statement. I'll see Fatima if I get time at 7:30 to take the class. I'll message you. So we can
Okay,
take the
sir.
class at 7:30. Some part is there now, some part to finish. We will wind up that part.
Okay,
Okay.
sir.
Yeah, we will try to take the class and finish this today itself.
Okay.
I don't want to keep this pending. Whatever the class I will take in 1 hour, I'll finish this. Okay.
All
So
right,
till
sir.
that time, please go through the concepts what we discussed right now. Okay.
Okay, sir.
Okay, Fatima. Yeah, because it's 5:30, I have one more session. So
Okay, okay.
I'll message you at 7:30. We'll try my level best to take the class.
All right, sir.
Thank you. Thank you.
All right. Thank you, sir.
Thank you.